The market traded in a narrow range. It stayed mixed throughout most of the session. The Nasdaq was mostly in the negative, dropping 15 points by the close. The Dow Jones Industrial Average gained 26 points, and the S&P 500 closed about flat at 1,215 points. For the week, not surprisingly, the financial sector got hit the most. It's down more than 5%. The S&P 500 index posted its biggest weekly drop in more than 2 months. The talk about Europe on Friday was increasingly focused on whether the European Central Bank will lend money to the IMF. A breakthrough there would give some traction on how Europe plans to finance its bailout fund. However, investors aren't expecting a firm word on whether the ECB can expand its role until the next EU summit in early December. To investors' relief today, funding costs in Italy and Spain stabilized. Yields on Italian 10-year bonds were back below 7%, while Spanish yields also eased off their highs. Investors are paying more attention to the deficit reduction talks going on in Washington. The Super Committee is supposed to decide on a budget-cutting plan by next Wednesday. It's unclear how much the market is discounting this. Some say it's really a non-issue because expectations are so low. However, as we draw closer to the November 23rd deadline, markets may see some increased volatility. The Conference Board's index of leading economic indicators in the morning capped off a string of positive economic data for the week. The index rose more than expected, suggesting that the economic recovery in the U.S. might be picking up steam.